So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again from Option Alpha, and welcome back to The Daily Call. Today we're going to try to answer the question, should you buy stocks near their 52-week low? So again, this is another question that was submitted from somebody via email. You can always submit your questions via email to us, or just leave us a question at optionalpha.com/ask. Either one works well. But basically the person was just wondering, hey, look, if I'm going to get into a stock and I want to invest for the long term, should I actually buy stocks that are at their 52-week low, or should I try something else? So my general opinion on this, and I haven't seen too much conclusive research out there. So if you have research, you want to send it over, please send it over to us. I want to take a look at it for sure. But the general research that I have seen out there is that when you generally buy stocks at their 52-week low, it's not as good as if you're actually buying them closer to their 52-week high. And so this might be a little bit counterintuitive, but when you buy stocks near the upper end of the trend or a breakout, it's actually more likely that the stock may actually continue to rise in price. Now, stocks that are at their 52-week low doesn't mean that they can't be a bargain in some cases, but generally what we see is that when you buy, say, ETFs or funds that are near their lows or have poor performance, those end up working out better in the long run. Now, that's a combination of different securities. It's not one individual security in and of itself. It's a basket of securities or an index or an ETF put together. Most of those funds, when you see them fall out of favor, end up outperforming the funds that are in favor during that same time period. So when it comes to stocks versus a fund or an ETF or an index, the rules might be a little bit changed. So again, if you're buying stocks in and of themselves, individual equity names, then you might be better off buying it maybe say closer to the 52-week highs or something that's on an uptrend versus something that could be falling off the table and dropping dramatically. So hopefully this helps out. As always, if you guys have any questions, let us know. And until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.